So realized vols have settled back a little bit after the explosion last week, but they are still pretty healthy. So we're looking at 82% realized on Bitcoin on a 10-day, and we're looking at 90 odd on ETH. So these are the yellow lines. Obviously, we're off the peak in Bitcoin, but we're pretty much near the peak still on ETH. Implied vols are higher once again. They had a little bit of a pullback last week, but they've gone again on the rally on Monday. And, carry-wise, that means we are pretty neutral on Bitcoin. We're actually negative on ETH because it's out-realizing the implieds. So that's showing you there's been pretty hard work for the Gamma sellers to make any money selling Gamma. We've obviously got CPI, which has just come out, which was the macro data point that could move markets. If we do get a decent move out of rates and FX over the course of today, it may well have some repercussions for crypto. So far, crypto's been immune to pretty much everything else. Also, for those who say that Bitcoin's just another version of the NASDAQ, well, Nvidia rolled over pretty aggressively last week and crypto didn't care. So far, I'd say crypto's been immune to tech. It's been immune to macro. That means it's all about the inflows, right? That's the driving narrative. That's what's driving crypto higher. And for now, they don't really seem to be slowing down in any material way. And I suspect between now and the halving, the inflows are going to keep coming. Because if you've had a load of institutions that have been just waiting for this product to be able to allocate into Bitcoin, and now it's finally approved, well, they're not going to wait around until the summer because they know the halving is a bullish catalyst. So they are incentivized to front load their allocation and do it as quickly as possible. And I think that's what's driving these insane inflows that we're seeing. Okay, in terms of term structure is shifting higher in both assets. It's actually being led by the back, seeing a bigger move in the back, which is interesting. About 5 vols in the back for Bitcoin, about 7 vols in the back for ETH. Front end is still higher, but not really crazy. So March expiries are kind of a couple of vols higher at best. Skew wise, we are seeing call skew fading. Bitcoin giving back 1 to 2 vols, and you're getting a much bigger call skew fade in ETH to the point where we've gone into put skew now. So ETH is in 2.5 vols of put skew in March and April. What's driving that? Seeing massive call spreads being bought in Ethereum, and those call spreads are obviously going to supply upside to the street, which puts a lid on call skew. And then we have actually seen some hedging coming back as well, as people concerned about this ETF story that, there might be resistance to it. So we did see some short dated put buying as well. All right, so that's what I'm seeing in term structure. In terms of relative value, the ETH Bitcoin vol spread shifting back higher by a few points, so 2 or 3 points higher. ETH implied vols outperforming, as we just shown. Realized vol also outperforming, so ETH trading about 8 vols, not trading, but ETH realized is 8 vols above Bitcoin on a 10-day basis, and it's about 5 vols on a 30-day basis. So it's kind of got back the baton in terms of moving more. The ETH Bitcoin spot spread had a nice recovery into the end of last week, but it has given back some ground as BTC broke through 70K. So the spread remains pretty volatile in the short term. I'd probably wait for a break on the upside before wanting to really chase Ethereum outperformance again. I think it's just kind of a tug of war between the two assets. As the halving draws closer and the ETF flows just keep coming, I wouldn't rule out Bitcoin's going to lead the rally again. So I don't think it's like permanently kind of handed it over to ETH and now it's an ETH story. For now, it seems because of the fact that macro and no other news flow is moving crypto, I think that's where you have to kind of pay attention. Be like, well, then what is the driver? Well, the driver is the inflows. And where are the inflows? They're on Bitcoin. So because of that, I've kind of closed out my remaining call switch trades. They did make me a bit of money last week on the Ethereum outperformance and the vol bid that Ethereum had. So I got them out the door. I don't have those switches on anymore because I'm not as strong a believer in near-term Ethereum outperformance. I just think the spread is very choppy. I don't think there's that much edge in that spread right now. So I'd rather just have a bit of long on both assets rather than have a spread trade on. Okay, and then on Skew, we kind of already mentioned it, but just to show it on the chart. So even as spot broke higher, we're seeing a pullback in call Skew. Major upside targets of 70K and 4,000 have been met. Some people have been happy to take profit on call options. There has been some fresh buying of bullish positions, but as they take profit on outright calls and then they replace them with call spreads further out, then effectively, that is a net Vega sale and a net Vega sale on the upside, basically. So that's why you get call skew come down. The biggest move has obviously been in Ethereum. You can clearly see that here, where we've seen this big yellow line spiking. That's showing you that 1 month skew has flipped back into put premium for Ethereum, although it stays in call premium for Bitcoin. And then when we go out to 3 months, it is still in call premium, but only 2 vols in Ethereum versus about 5 on Bitcoin. So that's there. I mean, like I say, it's because we've seen short dated put hedging. We've seen massive clips of call spreads go up in April as well in Ethereum, and that's what's creating this big move in skew. Futures funding rates are so high. We mentioned high risk of a leverage flush out, such as the one we saw last week. So it does make sense to have some hedges in the book. But the speed of the recovery that we saw last week from the flush out, because of all the institutional demand, shows you that it's pretty hard to monetize hedges, right? If you put hedges in place, don't expect that you're going to be able to necessarily monetize them that easily, because even in a dip, the bounce is happening so fast. So the reason to have hedges is just because you are not so active and you want to have some passive hedges in the book that if we go down and stay down, then you would have been protected, and then you can maybe think about monetizing your hedges, right? But if you want to trade every swing, then you know you're going to have to be pretty quick, because those dips don't last very long. And then in terms of which hedges to use, I still like put spread collar hedges, because when implied vols are so pumped, it's a way of getting a hedge on, but being net short vol on it. So it becomes a bit of a no-brainer for me as the preferred choice of hedge. And that's something we cover in our advanced options course that we offer at Options Insight, right? So for those who haven't attended or done any of those courses, they are now fully online and available to purchase from the website. And they cover portfolio hedging, they cover crypto options and our analytics and all that sort of stuff. So check those out if you are interested. Okay, in terms of the dashboard, we're obviously in sell calls. We've kind of been there for weeks now, and that would have been a horrible trade given the breakout. So remember, this is not gospel. This strategy compass is just a guide. But what is this saying to us, really? Anything standing out? I mean, like I said, we got fairly neutral carry on Bitcoin. We've got negative carry by 6 vols on Ethereum. So these things are still winging around and kind of making you think probably don't want to be selling too much gamma here at these levels. In terms of the flows, we had volumes flat on Bitcoin, but still a whopping $15 billion, matching the high record that it made last week. As I said, profit being taken on upside in June, the 85K strikes, March, the 70K strikes, as spot broke above 70 and took implied vol with it. People using that as an opportunity to take profit on calls. The fresh bullish trades, there's some March 85K calls, out of the money stuff, and some April and June call spreads, 70K, 90K in April, 85K, 105K in June. And then in the last 24 hours, you can see this cumulative action chart that you can get from Amberdata is showing all of this red is all on the upside, right? So this 90K strike and above are all getting sold because they are part of call spreads. Those are the area that people are happy to offload. I guess people are seeing 100K as another target that we could potentially get to, but not necessarily break through. So that's what we're seeing in Bitcoin. And a little bit of put buying here as well in March. All right, so that's the flows in Bitcoin. In terms of the flows in ETH, volumes are up 35% to $8 billion. So pretty chunky now, Ethereum volume. Similar story in terms of March calls being taken profit on, but we did see some fresh buying as well. So you can see lots of pink, green, and purple. So the pink is actually for this week. Green and purple is for the rest of March. So some two-way sort of flow in calls there. But really the big blocks to note are these call spreads in April. So 3,600, 4,600, and 4,000, 5,000 call spreads. So all of these calls are getting sold, which is why the call skew was getting hammered, basically. And then just to top that off, we've got some puts getting bought in March as well. 3,600, 3,400, and 3,200 area all getting bought, actually even there as well. That's the 3,200, right? So that area is seeing some put buying as well. And that is because people are a little bit concerned that we've hit the 4,000 target now, and the ETF catalyst might be a bit further away in the distance than we first thought. All right, Gamma positioning. Bitcoin dealer Gamma remaining long to neutral, but more neutral right here, right now, as upside gets sold back to dealers on profit taking. Positioning is pretty balanced here. We need, it would get longer if we rallied. You can see here, because of the upside that's got sold back, if we did start to go away from 70K and up to here, there's a load of long strikes in March here, which would take dealer Gamma positive again. Ethereum dealer Gamma, has started to drift lower. So it is in about negative 10 mil right now. The big short strikes seem to be the 4,000, but you have got the 42 as well. So, this might be a case of, as we get closer into these expiries, and we've obviously got Friday, the red one, we've got 29th of March, the yellow one, you can see that short Gamma actually get a bit bigger into expiry. And because it's ETH and it's not quite as liquid as Bitcoin, it might have more impact. I mean, it's certainly supportive to the idea that realized vol on ETH could be higher than Bitcoin, and it has been for the last week. So this setup in Gamma only reinforces the idea that Ethereum is more volatile at the moment and will probably stay that way. That's the feel. So even if Bitcoin rallies on ETF inflows, because there's less Gamma around and maybe a bit of short Gamma around on ETH, you could see realized keep pace because of that. And then also because of this upside that dealers have on Bitcoin, that could act as a bit of a cushioner, a bit of a dampener for Bitcoin. But I don't think positioning is big enough to really have that much impact, because I think the ETF inflows are just so damn big that they overwhelm it. But on a relative basis, it is supportive for Ethereum volatility. That's the summary for this week in crypto. Thanks a lot. As always, I'll catch you guys later.